Steve, I just want to challenge you on one thing that you said.
On the Fed.
Which is, you said that this growth has to moderate for the Fed to lower interest rates. And this was what my whole campaign was about, that growth does not cause inflation, and that, reducing growth doesn't somehow require the Fed to. Look, growth, Steve, pushes out the supply side, reduces prices, and I'm hoping actually that, the Fed does reduce rates. We can call that Moore's revenge if that happens, because remember, I was the one who called out, and many people did, but my main thing was the December rate hike was unnecessary. They still have not reversed that rate hike, and they ought to.
Do we know for sure about tariffs? I mean, I saw again that people said that import-export data helped the GDP. It didn't hurt the GDP. So if you had I can't even believe we're talking about QE, but if you had a rate cut and QE, even if we had these tariffs, that's why I think the Fed needs to raise, because I just don't see how you could actually.
So here's another thing. Here's where I disagree with the president. You can't reverse bad trade policy or bad fiscal policy or tax policy by changing interest rates. I mean, the Fed's responsibility is to keep the dollar stable and to keep prices stable. So, we can have an argument about whether, what the impact of this trade war is going to be, but I just don't think that the Fed is going to be able to counteract that.
But isn't that why rates are
cutting rates?
Isn't that why the traders think we'll get a cut? Because the economy is going to slow because of the tariffs?
One of my three things was the shock to the system that could come from trade. That's one of the things.
Why
if
else
you bake that out, and the market it's interesting the way the market reacted this week, Joe. There was a shock, and then there was a kind of an unshock.
Right. But Germany is negative again. I mean, why should we be even at 2.5 if Germany's negative?
Well, if you look at the Fed's target, they've been targeting 2% inflation. For at least the last 4 months, they've been below that target. I just think there's a threat of deflation in the economy, not inflation.
Steve, I'll tell you when you'll be right, in my opinion.
Yeah.
Is when, and the disagreement you have is not with me. I'm reporting what I think.
I get it.
You know how that works, right? I think the Fed has this mentality about the relationship of growth, and I have some sympathy for what you and Larry talked about, the supply additions to resources and disinflationary. So here's how I think you can be right, which is if you have a run of higher productivity, and that productivity looks to be linked or is linked by the Fed to lower inflation, then I think the Fed can say, you know what, we're a little tight, let's come down. But you have to keep in mind the quote I gave you from Brainerd. They want to hold on to their conventional monetary policy space so that they can react if they have.
And I hate that. If I'd been on the Fed, I would challenge that whole idea. I mean, this was the problem I had with the rate increase in December. It's mentality. Here was their logic. We have to raise rates now and cause a recession so we can cut them later to combat the very recession we caused. I mean, I just don't think that the responsibility of the Fed should be to tweak interest rates one way or the other to somehow juice the economy. I just think that's wrong-headed. We want stable prices. You put stable prices on top of the tax cuts, the deregulation, the pro-American energy policy. Now, look, the trade stuff is bearish for the economy. No question about it. We got to get this.
You don't want the rates to juice the economy, but that's what they would ultimately do.
No. The reason I want a rate cut is because I'm worried about falling prices. I think they're below where prices should be, not because I want to juice the economy. That's the key difference here. I want to keep prices stable over time. I want that dollar that you're holding in your pocket to be worth, 5 years ago, pretty much what it's worth today. That's why we have a currency, right? The purpose of a currency is to retain its value over time.
We're having a populist discussion about what the Fed would call the neutral rate.
Right.
What's the right run rate for the economy you could argue, Steve, if you got a $20 trillion economy and you're running inflation between 1.5% and 2%, you're darn close to your goal. And I think what the Fed would have said to you is, we think we have the capacity here to take that rate hike and not hurt the economy. And it's sort of borne out to be true.
It's borne out to be true.
In December.
That December rate increase crushed the economy. I mean, my goodness.
Wait, hold on, Steve.
Crashed.
Let us review the bidding, as we might say in bridge. You had a rate hike in December.
Yeah.
You had 3.2% growth in the first quarter.
But that was
how
only,
could the rate hike have crushed the growth if you had above trend growth?
That was only after the Fed reversed course.
How could the market, the economy, possibly have responded?
The economy instantly responds to these changes in monetary.
I don't agree.
supply.
I don't think the economy was nearly as weak as the markets
the
and
stock
many
market
pundits.
fell by 2,000 points in 2 weeks afterwards, and the growth rate in the fourth quarter was very weak. Starting with, look, we had 4% economic growth in the summer of 2018. The Fed got spooked by high growth. They started raising interest rates, even though there was no inflation, and the growth went from 4 to 2.5 to I think I forgot the growth rate in the fourth quarter, but it was I think less than 2%. What was it? 2.2. You know, that's a big difference between 4 and 2. So I just, I hope if I've had any impact, it's to get the Fed to start thinking about, stable prices. And the growth does not cause inflation. That's why I kind of went off a little bit. And I know you were not talking about, you were saying, here's the market perception on this. But
you want a single mandate instead of, we have a triple mandate. We got price stability, full employment, and the stock market going up.
What a beautiful picture. Yeah. Why did the Fed have to
you want price stability, yeah.